Hi everyone, we are from Investment Analysis Group 9, Class Donkey. Today we are going to talk about the stock valuations of three companies in plantation industry, which is Chintek Plantations Berhad, Hapsing's Plantations Holdings Berhad, and Sarawak Oil Palms Berhad.
So I will start our presentation with economic analysis. The Malaysian government directs national monetary policy to modifying interest rates and adjusting the money supply. Malaysian government used the Central Bank, Bank Negara Malaysia (BNM), in charge of developing and executing monetary policy in order to preserve price stability and foster long-term economic growth. BNM used overnight policy rate (OPR) as a monetary policy instrument. Next, for the fiscal policy, it is known as the use of the government budget to influence economic activities. The government's two primary fiscal policy instruments are government taxes for revenue collection and expenditure for government spending. Next, industry analysis. First, the growth cycle of industry. The palm oil plantation industry in Malaysia has gone through several stages of development throughout the years. Some of the stages that palm oil has faced are early development. After that, the palm industry in Malaysia experienced expansion and growth in the early 1960s. Lastly, the palm oil industry in Malaysia started diversification and downstream activities.
My Duncan Show measurement 2719570. Now we'll talk about the fundamental analysis for three companies. In terms of current ratio and quick ratio, Chintek Plantation has too high ratio, which means there's too many current assets. It may lead to capital allocation problem. And for Sarawak Oil Palms, they control their ratio in the status. So we'll suggest Sarawak Oil Palm Berhad invest. In terms of account receivable turnover ratio, Chintek Plantation has highest ratio, which means they can hold more assets because they are conservative in providing credit in active in collecting money. So we'll suggest Hapsing Plantation. And in terms of inventory turnover ratio, Chintek Plantation has too high ratio and it may be affect their sales. But for SOP, they control well. So we'll suggest Sarawak Oil Palm Plantation. And for total asset turnover, Chintek Plantation and Hapsing Plantation has similar total asset turnover. And for SOP, they has higher turnover which approach to 1, so which means that they use their asset effectively. So we'll suggest Sarawak Oil Palm.
Now, I will share about the leverage ratios. This is the first leverage ratio, which is the debt to equity ratios. In general, the lower the debt to equity ratios, the better for the company leverage performance. In this figure, investors should consider about Hapsing Plantation Holdings because of its reasonable and acceptable debt to equity ratios. Despite increasing, the ratio remains lower than the Sarawak Oil Palms Berhad, indicating lower financial risk and fewer debt obligation. Chintek Plantation has the lowest debt to equity ratio, which is 0, but it may experience difficulties in expanding its operations due to limited access to finance through debt. Thus, it is not considered. Next is about equity multiplier. In general, lower equity multiplier is better for company. Chintek Plantation Berhad has the lowest equity multiplier of the three companies. This implies that the company is less financially risky because it relies more on equity investment for its assets. Thus, investors may consider investing in Chintek Plantation Berhad because of lower financial risk and lower reliance of debt financing. The last leverage ratio is the time interest earned. Using this ratio to analyze and evaluate the performance of the three companies is difficult because this ratio for Chintek Plantations Berhad cannot be determined because there is no interest expenses due to lack of debt financing. However, the high time interest earned by the Hapsing Plantations Holdings suggests that its earnings are more than sufficient to fulfill its interest obligations. This indicates a higher ability to meet interest payment and have a lesser risk of debt default. As a result, investors are encouraged to invest in this company. Now comes the profitability ratios. The first ratio is the net profit margin. A higher net profit margin may indicate financial health, profitability, and long-term business performance. Chintek Plantation Berhad has the largest net profit margin of the three companies. As a result, it is possible that investors will prefer to invest in this company.
Assalamualaikum warahmatullahi wabarakatuh and salam sejahtera. Thank you to the previous presenter. My name is SYAHRUL AIZAT bin SHAMSHUL ALIMIN, metric number 28402. I will continue the fundamental analysis for the three companies. Based on the graph, the highest ratio among the three companies is Chintek Plantations Berhad. The higher the ratio is better for the company. It is because the company effectively converted its asset to generate profits in those 5 years. So, among the three companies, Chintek Plantations Berhad might be considered by investors to invest in that company. Next is return on equity. According to the graph, it shows that the highest ROE is in 2021 by Sarawak Oil Palms Berhad, which is 18.2%, and the lowest is in 2018, 1.78% by Hapsing Plantations Holding Berhad. I show that above 8% is considered good for the plantation industry. With the analysis, Sarawak Oil Palms Berhad and Chintek Plantations Berhad have good ROE in 3 years over 5 years. Other than that is trailing price earnings ratio, or we can call PE ratio. The average and low values of ratio are better, which is Sarawak Oil Palms Berhad and Chintek Plantations Berhad that have shown in the graph. Both companies have good PE ratio than Hapsing Plantations Berhad. It is because Hapseng Plantations Holdings Berhad has high value of ratio that consider overvalued stock for the investor. Moreover, dividends payout ratio. Based on the graph, Hapseng Plantations Holding Berhad had 187.5% dividends payout ratio, which is over 100% and the highest among the three companies in 5 years. It is a bad sign for the company in paying dividends to its shareholders. The lower the ratio is better than higher because the company need higher EPS to cover dividends paid to the shareholders. On average, all companies have good ratio in those 5 years. That's all from me. I will pass to the next presenter.
Next, I will present about the equity values, which is intrinsic value for each stock using dividend discount model, free cash flow to equity, and PE model. Firstly, dividend discount model for each company. The dividend discount model estimates the stock to market value regardless of the market condition. In this model, CAPM is used to find the rate of return statistic because we use variable growth to find the DDM price. According to the table, intrinsic value for Hapseng Plantation Holding is 6.92, but the actual price is 1.96. Data reveals that data is undervalued because the intrinsic value is greater than actual price. It means that investors should buy the stock because it's discounted, while demonstrate that Chintek Plantation Berhad and Sarawak Oil Palms overvalued DDM price. Since it's less than the actual price, it's overvalued and they will sell the stock before the price will be full down. Next is free cash flow to equity. Free cash flow to equity is a company's equity shareholders and cash after expense the investment and debt. It includes free cash flow and shareholder outstanding to find intrinsic value. The table shows that Hapseng Plantation Holdings intrinsic value is 28.52, exceeds its price, which is 1.96. Intrinsic value of future cash flow is securities inherent worth. Thus, this intrinsic value is going to rise dramatically for Hapseng company. This shows that intrinsic value is undervalued and urge investors to buy the stock, while Chintek Plantation and Sarawak Oil Palms have inherent value below their price. The current stock price will decrease next year, so selling share now avoid future losses. Next is PE model. To determine a company's PE ratio, simply divided the market value price per share by the earning per share that the company has generated. To find the intrinsic value, using the PE model, the EPS value to the multiple to the PE ratio. According to the information present in the table, the share of Chintek Plantation Berhad, Hapseng Plantation Holding and Sarawak Oil Palm Berhad are undervalued because they have a higher intrinsic value than actual price assessment. Investor can now choose which of the three companies has the highest intrinsic worth and profit potential to buy share in. That's all from me.
Next, I will explain about technical analysis. First, Chintek Plantation Berhad. Based on the stock chart above, in April 2023, the MACD line crossed below the signal line, which represents a buy signal, and the market is in a bearish mode. For the RSI line, when the RSI line is below 13%, it will be considered an oversold zone. So far, Chintek does not get an RSI line below 30% in 1 year. Next, for Hapseng Plantation Holdings, based on the stock chart above, in April 2023, the MACD line crossed below the signal, which means that from April 2023 until June 2023, the market has in a bearish zone and a buy signal. For RSI, from 20 March to 3 April 2023, it shows that RSI is more than 30%. Next, Sarawak Oil Palm Berhad. But based on the stock chart above, in March 2023, the MACD line crossed below the signal line, which means that the market was in bullish zone. In September 2022, RSI got lower until below 13%. This means that it was considered an oversold zone. Lastly, recommendation. The fundamental analysis for these three companies shows that Sarawak Oil Palms outperformed the other two companies in the past 5 years financial ratio. If we look at the ratio, Sarawak Oil Palms is good at managing their asset and liability. Next, for the dividend discount model, it shows that Chintek and Sarawak Palm Oil are overvalued. Generally, investors will choose to buy the stock that are undervalued, so Hapseng is a good choice because the DDM is higher than the actual price. After that, for the free cash flow to equity model, it shows that Sarawak Palm Oil and Chintek are overvalued and Hapseng get undervalued FCFE. The investor are recommended to buy stock from Hapseng because now the company can get the intrinsic value for FCFE higher than the actual price. Lastly, the PE model shows that the three companies are undervalued. The company we can choose here is Chintek. For the technical analysis, overall, Sarawak Oil Palm shows that the market is mostly bullish and showing a buy signal. Plus, RSI for Sarawak Oil Palm is the highest and most stable than the other two companies.